more details, though, Jim Stening joining me right now from FIIG Securities in the studio. Jim, welcome back. Haven't seen you for a couple of weeks. Just give us your thoughts on what the bond market's telling us at the moment.
Yeah, well, I mean, if you look, say, for example, to the 3-year benchmark yield of government yields, that's approximately around 5.25%. And we've got a cash rate of around 4.25%. So, you know, we've heard a lot from economists. The average sort of forecast seems to be that this cycle, in terms of monetary policy, will peak around 4.75 to 5% later in the year. So that's really well and truly baked into that cake, if you like. If it does have a bias, it would seem that rates are probably a little bit high, based on that being the peak in the cycle. And if you look at it from a technical perspective, it does look like those rates can move a little bit higher.
Okay, and would you be viewing some things like the lending figures of the last couple of days, with some extra information? Does it look like the RBA might slow down any hikes?
I think what's happened just recently is, we seem to have punctured through these levels, like in the Dow at 11,000, in the equity markets, and domestically here around through 5,000. So there does seem to be, investors are more exhaling than inhaling at the moment. There does seem to be a great deal of confidence, and the sentiment is certainly positive and improving. So I think that that's a very encouraging sign. We're also seeing in the region some very, very positive economic data, the Asian region, and so that's really, really positive for Australia as well.
Singapore yesterday?
A remarkable quarterly GDP figure, absolutely amazing, and obviously they're looking at their forecasts, and they're moving the Monetary Authority of Singapore is moving quite aggressively to, obviously they had underestimated that growth.
It's funny we suddenly focus on Singapore, through the crisis. We haven't even really talked about it, but it becomes kind of that marker of, Australia moved on rates, now Singapore's moved to tighten things up.
That's right. I mean, an incredible quarterly figure on GDP, and I suppose that sort of sets the tone for what expectations are from other larger economies in the region, and China later today, for example.
So when you look from this point forward, what are you thinking in terms of the yields and whether they might keep moving up here in Australia?
Yeah, well, I think what investors really need to consider is that all the talk at the moment is about the Reserve Bank moving to neutral from accommodative. Well, where to from neutral? If what we're seeing is this massive surprise on the upside in growth in our region, and adjustments to inflation and forecast inflation from authorities upward, well then there is a possibility that the Reserve Bank could be moving to restrictive policy once we get to accommodative, because we have to do something from there. So I think that it's interesting because there's a real chorus. Everyone seems in line in terms of where we peak in this cycle and get to neutral policy. But I do think we need, as investors, we need to consider over the longer term whether we're going to move to restrictive. And things are starting to look like that is a possibility.
And what kind of markers will you look for, or what's important in terms of driving the decision?
Yeah, well, I think, coming up this later in this month, we've got some really significant releases. We've got the minutes of the Reserve Bank that are coming out on the 20th. That should give us some more information. I don't expect any surprises. They've been very transparent. But we've also got, really importantly, an inflation figure. And so markets will focus on that. Inflation seems to be, it is a real focus in the US, where you've got an unemployment rate of 10%, and Bernanke and everyone sort of is very satisfied with inflation in that they don't see it as a threat. But our region is different. Things that we're exposed to seem to be very different to those traditional economies. Yeah,
I mean, deflation seems almost more of the issue in the United States at the moment. It's so benign. But
well, that's right. It's not a concern.
Yeah, and so here in Australia, inflation you see as really the major point from here.
Well, yeah, I think it's a real focus. I mean, we've talked about this before. Unfortunately, we get these quarterly releases, this will be well and truly scrutinised. And I think, interestingly, it's a heads up that these growth figures are surprising on the upside in the region, I think, for our growth figures for March quarter as well.
And again, as you say, it just reminds us what a different scenario we're in to the United States, and again, why we focus more on things like Singapore GDP now and China GDP. When you get the minutes from the RBA, what sort of focus do you expect the RBA to have?
Yeah, well, I think that I mean, I can't remember when the Reserve Bank's ever been so transparent. They've been, really, they've done it in a very good way in terms of they've communicated broadly to everyone, I think, that rates are going up. So I would expect that hawkish tone to certainly be in those minutes. What seems to happen is that this positive sentiment we talked about a bit earlier seems to sort of take over from the event of the tightening. So I think investors should be wary of the tone of those minutes that are coming out, and I think obviously then we look to the tightening again in early May.
And so you do think we might have a hike in coming weeks?
I think so, yes.
Even with budget?
Yeah, well, I suppose that always causes a few prickles, I suppose. It's generally, I mean, obviously should not be a political consideration.
Yeah, absolutely. And what about in terms of the minutes, whether there's going to be any mention of Greece? Because I think, you know, in the last couple of weeks since the last meeting, that kind of ramped up again. And
it has. I mean, again,
still.
it's two worlds. It's Greece is being downgraded, and those economies are looking bad. You've got South Korea being upgraded by Moody's overnight. So it's becoming the impact of the global economy is a very difficult thing to manage, I think, from the RBA, given where we sit in this transitional phase.
Jim, great to have you back, as I said, and thanks very much for today. Appreciate it.
Thanks, Brooke.
Jim Stening there from FIIG Securities with the update.